Hey guys, it's Willie. Today I want to take a look again at United States Steel, stock ticker X, currently trading at 33.34. Recently I did a video on it not too long ago, and I received a comment looking like this from James. Might have to upload a revision of this. My first initial thought when seeing a comment like this is, okay, is he just messing with me? Is he just thinking I'm wrong? He's arguing with my analysis. Something changed, whatever. A lot of short-term stuff tends to have people think that you have to rethink your entire analysis of everything, even though it's a minor thing. But I thought, okay, I'm gonna give this comment a chance. I'm gonna say, okay, why do we need to do a revision of the U.S. Steel video? And after some searching, I replied to his comment. So the revenue numbers, the new revenue, cash flow, all that numbers came out for U.S. Steel for 2021. And I didn't expect 1 year to extensively change the analysis of the stock. However, I came to as I said in the video comment, a very different result than I had arrived to in the previous video. And I said I would update it soon. Now is soon enough. So let's flip back over to the stock price again. This is kind of the chart. This is over the past 6 months. We've seen a good run here recently, since the first of the year, really. That's looking pretty good. 80% up, nice. So let's flip over to the spreadsheet here, and you can see the new numbers have come in here, our 2021 numbers. They do change a good bit the assumptions I arrived to in the first video. So we're going from 19 to 20 with revenue basically zero growth. Call that flat. Net income, you're still getting an error message because it's going from a negative number to a positive number, which is technically a infinite percentage growth. I mean, you can't multiply a negative number by a positive percentage and get a positive number. It's always going to give you a negative number. So you're getting an error message there, but it's good to see this positive number actually come out of a lot of these. After so long of having these negative years, we're seeing a really strong positive number. Good job, U.S. Steel, doing that. Free cash flow, again, you're seeing another really strong number coming up. Shares, again, this is really, really worrying to me that it's 280 million shares versus 197. Let me make sure that's right, because that seems high. Okay, the data's in. Yeah, that's right. So if the shares are going to keep going up like this, I think that's a problem. That's a definite problem. You're diluting your shareholders. There was something that I had seen. U.S. Steel had said something about buying back stock. I guess that's just talk at the moment, because I'm not seeing really anywhere that they're looking at buying back stock, at least on a meaningful scale. Especially when you issue, that many shares in a year. That's worrying. Earnings and free cash flow from the most recent year are both really strong, really positive. Total assets, your dividend went up from the previous year, but down over the average of the past 10 years. I'd like to see U.S. Steel get back to this 20-cent dividend. However, really on top of that, I would like to see buying back these shares. I think at this point U.S. Steel should be slowly increasing this dividend, if anything, or keeping this flat at 8 cents and then starting to buy back these shares. I think that would be better for U.S. Steel. Debt is, it is what it is, not too dissimilar from what we had before. Cash has gone up. Net debt about the same as it was. ROIC, a good positive number for this year. So coming back down here, you're looking at new numbers for the current free cash flow and the current net income using these values. So looking at this long term, I said, okay, flat. You're looking at a flat growth rate. You're looking at a PE of 10. That's very conservative. So you're in at 33. These are your two price targets based on the net income and free cash flow in the next 10 years. You average those together, you get, call it 133. So you're in at 33. You get these free cash flows. You're out at 132.63. That's a 58% IRR. So my comment on this is that either this shows a change in direction for U.S. Steel, going from a lot of negative years in the past to hopefully a sustained positive in the future. But I think for the most part, I think this really shows how much 1 year can really throw off your forecast and your assumptions about a company. If I'm looking at a company like this one, like U.S. Steel, and I see this really absolutely stellar year after, 9 years of absolute crap, frankly put, I'm going to throw out this year as a fluke, and I'm going to go based on the old numbers. But I think the moral of the story is that if U.S. Steel can maintain what they've done in the past year, it'll be a great buy. But I'm not able to really say, okay, over the long term, data shows that you get this. Well, we're only going off of 1 year, so it would be a really bad idea to forecast the next 10 years based on 1 year of data. So I think this 58% IRR, I don't think that's true. I think that's some wacky forecast. I do. I think that's silly. I think that U.S. Steel I think they're a good company. I don't quite understand how you can go from so many negative years up in here to going to a big positive number. I don't see that as a mark of being a good business. Now, U.S. Steel is, they're very dependent on commodities, and that's why, these numbers can change so often. I would like to see U.S. Steel kind of figure out how to stabilize some of this stuff. But I think it was a good idea to do an update on this. But I don't think that it changes the forecast and the long-term assumptions of the company. Still, most of the data says it's a bad company. So again, I'm not putting any sort of confidence in this 58 number. I didn't put any confidence in the forecast before because it was, it was basically all negative numbers, and so you're getting a negative return because your net income and free cash flow are going to be negative in 10 years, all of that stuff. So, don't go off of 1 year worth of data, even if it's a stellar year. It's a fluke. At least I would treat it as a fluke. If U.S. Steel goes on and can really do well, if they can continue to do what they've been doing over 2021, you're looking at a stellar return. However, I don't think you're going to see that at U.S. Steel, and I don't think you can make those assumptions comfortably about the future. But, thank you, James, for making the comment. At least I think it was James, if I'm remembering that correctly. Thank you for making the comment. Thank you for letting me know that the numbers had changed so much. But in the end, you can't base it on 1 year's worth of numbers. But a good teaching moment, a really good teaching moment to say that you can't depend on 1 year. You have to look at long-term data and make reasonable assumptions about the future based on that past data. So that's really all I had to say about U.S. Steel. I'm going to end the video here. As always, a reminder, do your own due diligence and like, comment, subscribe, all that stuff that YouTube tells you to do. As always, continue to put comments down below, guys. I read them. Me being a new channel, I don't get that many comments, so I read all of them and I try to respond to all of them. So definitely put comments down below, you know, if something changes about a company, if something comes up, news, or if you just decide you want to pick a company that you like, that you want me to take a glance at. For sure, put it down below. I'll see what I can do. At this point, I'll probably get to it because I don't have a flood of comments coming in. But yeah, so I'll end the video here, and I'll catch you guys in the next one.